Thanks, guys, for showing
All
up. I'm
right.
not going to mess around with the pleasantries. Let me just hop into it. Things that matter, position to win. It's my whole mantra as a trader. It's everything that I embody and everything I do now, everything I teach. As always, we're talking about money. You're talking about markets at risk. You have to understand what is at risk. So there's your disclaimer. Okay, guys. Well, I hope everybody's having a nice Wednesday. It's summer in July. I know there's some World Cup on in an hour and or 2 hours, but we'll get right to it. I'm going to show you guys today, I'm going to show you a very simple approach I use to trade in the futures and forex market. Had a really great student over the last couple months, and Jason, the reason it's been so exciting is because Jason is your typical retail trader. Jason is your typical guy that starts with a much smaller account. I think in a beautiful world we would all have much larger accounts and have a lot of ability to do things, but it's just not simply always the case. Jason is your typical, what I call retail trader, starting with typically a smaller account, but he took this smaller account and has managed to double it and keeps pulling money out. But it's all with the same approach, and it's really simplistic in the way I go about it, but it's highly, highly effective. And that's what I'm going to share with you guys today, and really kind of the approach I use. Everything you need, what I do, it's right in front of you. It doesn't require a lot of add-ons. It doesn't require indicators. We do have some things we use in the room. We have some added tools that are available only in our environment. But for the most part, everything I show you, you have on your screens right now. The power of levels, what that precision does, even with small accounts. I'm going to show you how to frame your trading days, and this is what's so different. So real quick, I just wanted to take a look at Jason's account. Jason, again, starts with a very, what I would call modest, not small, not diminishing it, but a very modest account size, and grew this account. At last tally I had a few weeks ago, he had taken this $5,000 account, again, continued to pull money out, but was above 18,000, which I thought was really phenomenal. And I was thinking about it from this standpoint. One of the best hedge fund managers in the world, guy by the name of David Tepper, multi-billionaire, just bought the Carolina Panthers, so a fabulously wealthy guy. The last time we did this presentation, I don't know his P&L as of July, but a couple months ago when we did this, David Tepper was up about 6 percentage points on the year, and the S&P was up about 1 or just under 1%. And so what that really meant was the best performing hedge fund manager in the world was outperforming the general stock market to the tune of about 600%. That's an unbelievable outperformance. The average retail trader, if you looked at a 6% return, you would probably acknowledge, hey, that's positive, but there's nothing I can do with it. I could take my $5,000, I could even take $15,000 and 6% over the course of the year. I just can't live off of it. And it quite frankly, the goal of many retail traders is not to have these really kind of consistent 4, 5, 6, 8% returns. What a lot of people are really trying to do is add a second income or even replace an income. So it's a different kind of mindset with trading. With that come different hurdles and also some things that are very good about it. It's not all negative in the retail world. In terms of what you have stacked against you. You have the ability to have no positions. A lot of these multi-billion dollar fund managers, they have to be positioned all the time, or at least a lot of money put to work. We don't have that same kind of approach where we have to be invested in the market. If we simply don't see a setup or some type of good risk money management approach, we simply don't have to trade. So there are a lot of advantages. But Jason joined the class last year, and Jason has done really well. And I would love to tell you Jason's the star student, except for that this latest round of sales where we have a new class that joined a couple weeks ago, I have some people that are outperforming Jason. So I've loved seeing the positive reaction and what people are really able to grab out of this. So again, Jason's account going from that 5,000 eventually over 10, and I know he's withdrawing money and then being able to run it up again. It's pretty good stuff. And if you look at what his trades look like, it's not this massive leverage. He does get bigger size on, but it's all dependent on what his risk becomes. So for example, if his risk were 10 ticks, it's double the position size of a trade that may have 20 ticks of risk. So it's a very steady approach. And it's one of the things I teach in my approach, which is you could have a 100-point stop or you could have a 10-point stop. As long as you adjust your sizing, you know what you're going to risk and you know what your downside of that trade is. Jason's account was not and never is straight line. The trend is higher. The trend moves higher, but it's not a straight line. And this is really typical. You see he has some drawbacks. And Jason will flat out tell you, there are times where we're entering trades, where we're approaching trades, and you're getting stopped out. You're getting stopped out. And the idea of the approach is that what you're doing is working against levels. And I'm going to talk about that a little later, but working against levels. Where some people that have not done as well are getting it wrong is they get frustrated, they don't believe in it, or they give up. The difference with Jason sticks with it, still manages his risk, but is present when the trade works his way. And that's a key difference between a lot of retail minds, which is just to say, you really believe in what you do and you're willing to run it. And a lot of people in the retail world have gone through this, where they've visited many different courses, many different approaches. At the end of the day, they've never really been able to stick around until they've seen it actually work. And it's a huge, huge factor in seeing the success is being there. A little more, so you're just seeing some of Jason's trades. He trades some gold, some sterling yen, some dollar CAD. He's actually quite big in dollar CAD. I know he trades that one quite a bit. So that's just a little bit about Jason. A little about me, and why are we even listening to me today? Well, I graduated Florida State University in 1993, and I did not picture a job in finance. I didn't know exactly what I wanted to do. I bounced around to quite a, well, not quite a few, but a handful of kind of entry-level jobs after college. I had no real clue what I wanted to do. I don't think I ever made over $25,000 a year. I got my first job in New York City, and I thought, I don't know how on earth I'm ever going to afford anything. Somehow I stumbled onto a job at a stock brokerage where I met a friend, and I knew right away that stock brokerage was not for me. It was phone calls, cold calling. It just was not what I was passionate about. But my friend took me to this trading firm on Wall Street. It was 100 Wall Street. And we walked in, and there was an energy, and I was instantly attracted. I was hooked. I thought, this is the job I want to do. I don't know how to do it, but I know this is the job I want to do. Several months go by, a lot of in-depth, looking into what would it take. And as it turned out, they would let you have a seat on their floor. They charged you, but you had to come in with your own money, right? So now here I am, a young 20-something kid with my own money that I borrowed from a family member. Again, I didn't have a history of being able to say, hey, you're a solid guy. You know exactly how to do this. So it was a big leap of faith by my mother to even let me do this. And when I started this, I didn't have a $50,000 drawdown. I had what was going to be a $15,000 loss if I end up having to quit this career. So I promptly went into work on Wall Street, got my little bag, got on the train, hopped in, showed up at work every day, and I promptly lost money every single day. Not tons of money, but almost every day. And I would read. I didn't have education, the type that I teach now. I didn't have that available to me. I learned by sitting around a group of guys, some who were good and made millions and stayed there, others who blew up in a day or 2 days or a week and disappeared. And no matter which one you wanted to look at, you could learn something from both of them. You could learn from the good people what you wanted to do, elements that you wanted to take, and you could learn from the people that lost. Wow, I don't want to double down on trades. I don't want to rot with positions. I don't want to get frustrated. You could see it all over, but you had to be willing and you had to be open to be able to see it. But it was a phenomenal, phenomenal education. Fast forward a few months, I'm very close to my stop out point. But at this stage, I had learned quite a bit. I actually started to have a couple green days. It's not, for 6 months, I don't think I lost money every single day, even though the net was lost. I finally got to the point where I just said, look, I know how to do this job. I have to stop being emotional about the dollar amounts. I either make it or I don't, but I have to take that leap. And from that day forward, I ignored the financial aspect, the money aspect, and I just simply would focus on this. I would say, what is the correct trading decision? And that's kind of how I live my life. If the correct trading decision is to be short of the S&Ps, then I'm short of the S&P. I may lose. The market may show me it's not ready to go down and it may cost me money. But if by my analysis, by my setup, by my indicators, whatever I was using, if the correct trading decision was to have a position, that's what I did. And it started very slowly, very slowly. But I went from being almost at my stop out point to having a little bit of P&L to work with, having $1,000 of room, $1,500 of room. But the difference was my approach, my mentality, my methodology was working. It was proving to me that it worked. So now from this point, everything I did was all scalable. And it's the beautiful part about what we do as short-term, or let's say shorter-term retail traders. Jason's approach in trading is scalable. Sure, he did it with a very moderate sized account, but it's scalable. So now all of a sudden he's not doing it with a 4-figure account, he's doing it with a 5-figure account, and it's scalable. You're not going to run into an issue where you have sizing constraints in these dollar amounts. Again, a beautiful part about the retail approach. So the bottom line was, after 6 months of doing this and finally finding a way to be profitable, all I did at that point was scale up my business. I became the number 2 or 3 producer at that firm inside of 2 years. And they handed me my money back and said, we want to hire you. So I had no more equity in the game. They gave me my equity back. They hired me at a percentage, and they gave me a line. I think when I finished trading for them, I had a trading line of $10 million, which that was a big line for an intraday trader back in 2000, 2001. It was a big level. From that point, I was offered an opportunity to start a CTA and manage outside people's money in the foreign exchange markets, as well as continued in the equities. And I built my CTA, Commodity Trading Advisor, in 2002. I started with $400,000 in assets from a very wealthy family, very public, very well-known family. They asked me would I trade some of their money, and it's something I had never done before. And I said, yeah, I guess it's interesting. I thought about it, and ups and downs in terms of trading prop was very different. Trading outside money from a management standpoint, again, a very different approach. But I was able to build that over time from 400,000 in assets in 2002 to 100 million. And think back what I was saying in the equities when I started out at the trading firm. As long as you're doing it correctly, scalable. So don't look at what you're trading today. A lot of people look at their trading accounts and say, well, these may be smaller. I can't really do anything. But if you can repeat a 3%, 4%, 5% returns monthly, quarterly, it's all scalable. And I understand the need. I do. I fully embrace and understand the need of, I need to make it today. I have to make this payment today. But that is not generally a recipe for success in markets. It's generally not a recipe for success. Mid-2000s, I sell my hedge fund model or I sell my trading model to a big hedge fund, and I've been doing education in my own trading and select a few people's accounts since then, and it's been great. So I love it. I really love the education. I really love dealing with people and teaching what I know. It's fun. It's been a great progression in this business. I've kind of seen all paths. I've started out as the retail guy. I've been the prop guy. I've traded for a hedge fund. I've traded a CTA, and then I've traded my own money on a bigger level. So I've seen it all. And the approach that I use today, it's really, as I said, it's a simplistic approach. It's all based on levels. To add to those levels, what I like to trade with is a clear bias of the direction I want to be trading. I'll give you an example. You're looking at a market like the S&P and say, well, in general, what is the bias direction of the S&P? And within each time frame, within each approach, you may look at the S&P and say, well, there's a different bias, and that's absolutely correct. The 5-minute bias may not be the monthly bias. You would have a tough time looking at the S&P on a monthly or a quarterly chart and being able to grab hold of an idea of anything other than bullish. You should be buying dips in S&P. But if you work your way down, again, time frames, and get on different time frames, you're going to see many moves within the S&P. Most of them have recently, starting from February of 2018. Most of them recently will show you opportunities of more two-way volatility. And so the idea of what I'm constantly doing in my world is reading the levels, where the market's acting from, the bias direction, and then simply executing. I want the path to be able to say, how do I take X amount of dollars and grow them into more than X? How do I do that? What's the path? And for everybody, that path can look a little bit different. What I've come to realize in working with retail traders and smaller shops and smaller traders is that there's a very consistent theme across that, which is most people are really stuck on the shorter term time frames. They grab everything they know from shorter term, they deal on shorter term, and all their answers come from shorter term. And what that really means is that there's a lot of whipsaw action for them. And some can do that successfully. A large portion do not do it as successfully. What I like to design and what I do in my program, what I do every day, every person that comes into my subscription area walks in Monday through Friday, 8:30 a.m., and we do a morning brief. And what I'm laying out in that morning brief is your bias direction, both for your trading day, right, just for that day, but in general, what is the general direction? And so we work from a bigger picture on down. And then it's up to each individual to figure out what is their best efforts approach for them. You know, there are some that have a mindset that simply say, I want to push buttons every couple seconds. And there's some that say, I don't need to trade but once or twice a week, and I'm fine with that. The ideas never change of what it is you lean against. You always want to deal from a position of strength. All right, so let's take a look at what some of that looks like when you're able to identify levels and a bias and a move away from it. So here I have a chart of sterling yen. A lot of people in our group will trade currency, so it's a sterling yen. And so when I talk about a sell bias, there are a few things I use, and you'll learn this in the course. What creates the bias? There are things I'll use in the course that will teach you what creates the bias. But understand that we have a bias well early, and we know that's the direction that we're looking. And so what you see marked up at the top, I've identified a level. So remember, I talk about a level. Levels are simply prior areas where the market either could not go higher, and so now it's rotating lower, or the market could not go lower and it's rotating higher. So the value of knowing that level and analyzing that level is the next time it touches it. So in other words, when you see me with a level here, the level was derived from the first touch and then the rotation off. The level down here in the 151 area, 151 trades 154, but that was the low area that the market could trade. So the next time you're at that area here, right, this is 10 days later. This is the type of advance notice you have in dealing with these levels, where a lot of people in the retail space will come in and they'll turn on their screens at 8 in the morning or whatever time they go to work and say, what looks good today? My approach is very different. My approach is more from the standpoint of saying, I know the levels the market has moved from. I am going to simply react when the market trades to that. And so the difference becomes, here's the level the market could not trade below. Simply placing long trade at that spot gives me tight risk, upside reward, and if we rotate, I get paid. If I'm wrong, I know what my loss is. So the trick is, over time, keep those losses very well contained, but understand how powerful those levels are when they work. It's not using an indicator. It's not using something that's strange to you. It is simply prior price action. Here's another look at crude oil. So a lot of us in our room trade crude oil. We're big crude oil traders. Again, level is designed, reaction away from a level. So this is a $4 move, right back to the same level. $2 move, right back to the same level. Now it has bias, and it has, again, one of the timing indicators that I use in my room, all at the level. So you start to think about the story and you say, well, why do I want to be long crude oil? Well, I have crude oil sitting at a price that hasn't been able to move below. My bias is telling me I want to be long. Okay, so now I have two marked off in the positive, and now I'm getting a timing indicator that's telling me to buy it right now. The power of that move, you're talking one contract in crude oil. This is a $5,000 move in this move. That's just an example of what's potentially there during an actual rotation. A lot of times you don't see $5 in crude, but a lot of times that there are $5 there, we're going to capture a good portion of that. The idea is not that we're bottom ticking, not that we're top ticking. The idea is to consistently grab the meat of the move. That's what we're looking for. All right, so let's take a look at the charts. Let's look out at the charts and see what that looks like from a standpoint of reality, right? So the little slideshow. I want to show you what it looks like in real time. Is everybody following along? You know, Jeanette, do I have the ability? I don't know if I see questions, and I know. Oh, actually, I do have it. I just wanted to make certain I wasn't ignoring if there are questions. So I'm pulling up that question tab as we speak. There we go. Okay, I just didn't have that tab open. Okay, so I talked about levels. I talked about bias. Let me show you what levels look like and where they come from and how they're derived. So euro dollar. A lot of people trade currencies. Euro dollar. Here is a daily chart of euro dollar. This is a daily chart of euro dollar. And let me back up a little. I'll get back into 2017. Seems like a great time to come back to. 2017. All I'm looking for when I'm designing levels, this is what I'm trying to figure out with the levels. When a market makes a high, it allows me to draw a level on the top side. That's what it allows me to do. All right, so let me get rid of all this stuff and just show you what it looks like when I draw it. All right, so if I draw it here, So August 31. So if anybody wants to follow along, pull up your Euro chart. September 8th of 17, the market puts in a high. Does everybody see? Everybody sees the high I'm working from. And I'm simply taking that level, and the way I draw my levels, I pull from the wick highs to the body, the next body candle. And that's all I'm doing. So I'm pulling that over. So what this does for me, it creates a frame of reference. I call this top edge. You can call it resistance. You can call it anything you want, as long as you acknowledge what it is. It was the high spot that the market could not go below. I'm sorry, could not go above. It was the high level of the market that the market couldn't trade above. And the way I have it drawn, it is 2092 to 2027. That's what it is. So it's 70 ticks wide. All right, so let's see how it works in real time. 70 ticks wide. The market rotates out of there. So my idea is that I want to be a seller on any move back into 2027 to 2092. Tracking? The market has rotated. I didn't make this up. I didn't say, well, I would love this level. The market showed me that on strength, that this was the highest that it could go. This was the highest level that it could go. It then rotates away. So the idea is any movement back into it, I would like to sell, right? I have timing indicator. I'm starting to get bias. There, on the 20th of September, 27, and I'll move the chart just so you can see. The 20th of September, price ticks right into this box. It's a 70 tick box. And what is the resulting action? So here on the 8th of September, what did the market do? It explored the highs and sold off. So what was the answer? If the question was, what did the market do? If the question was, what did the market do at this level? That's the question. It's a very objective. It's not subjective, right? It's not subjective. The question is, tell me, what did the market do at this level? I don't want to know what it was doing to get into the level. I can see what it did to get into the level. The question I'm asking, what did it do at this level? Did it go higher or did it sell off? Who was victorious? Buyers at this level or sellers? Sellers were. How do I know that? They drove it lower. They drove it 200 points lower. Okay, perfect. So if I can find the top spot that the market sold off from, and I can balance my risk to say, look, I have about 80 ticks worth of risk. My goal is to get short in here. I want stops above. So let's call it a 115 point stop. 115 point stop to be short in here. Now, this is a daily chart, so 115 is going to be a little wider. If you were doing this on a 15-minute chart, it's going to be much tighter. But the idea is the same. The level is marked for you on the 8th of September. Price rotates lower, right back to your sell area, and then what's the resulting action? Sell off. How far does it sell off? It ends up about 400 points lower. About 400 points lower. So about 120 points of risk for a 400-point return. What is the risk versus reward ratio there? It's better than 3 to 1. It's just one example. It's better than 3 to 1. On one standard lot in the euro, you were risking about 1,200 US dollars. What was the reward? It was about 4,000 to get to this spot, about 5,000 to get to this spot, and rinse and repeat, right? That's the idea. So what are levels? Levels are simply designing the outside edges, the outside containment areas that we want to be focused on. Here's a weekly look, same chart, euro dollar, same look. We have been on this level in our room for weeks. 1,500 to 1,550 in the euro. 1,500 to 1,550 in the euro. Where did that come from? It didn't come from a week ago. It came from October, November, early November. That's where the level was marked. Why was I marking it there? Because on the move lower in euro dollar in October, that was the lowest point it could get. 1554. That was my spot. 1554. And I was pulling from this, so I was using basically 1,500 to 1,550 on that move. So then all you need to do at this stage is say, okay, that's my bigger level zone. Remember, I work top down, bigger picture analysis on all the way down to tighter time analysis. So as you take your weekly and you go, okay, that's my level on a weekly, and you walk down to daily, and you walk down to 4 hour, you walk down to 1 hour. I don't care who you are. You can find an appropriate level that says, hey, I can handle that risk. And the difference between somebody trading a weekly type of outlook versus a daily, they may just have wider stops. They may just have wider stops. But here's that same movement. So now I'm back to a 30-minute chart. And you remember the level I said? 1,500 to 1,550. There's your zone right there. That's your buy zone. Look what happens when it trades into the zone. You know what your risk is? It's 50 ticks plus whatever you want to be outside of it. Rally. Right back to your zone. Rally. Right back to the bottom of the zone. Rally. Do you think it's magic that it just happens to be rallying from this spot? Or do you think those levels have memory? Because understand, everything you need is right in front of you. Right? There are different ways to do things. I always like to use this analogy. You look at you look at the PGA Tour. You watch all these professional golfers. They all have the exact same goal. What's their goal? Get that little white ball in a hole. Well, what's your goal as a trader? You want to make money. That's your goal. Do some people want to enjoy their job? Sure, but at the end of the day, you want to make money. And so the idea is, what is the best way to set you up to be able to make money? And if you can consistently define these levels, the ones that mattered, the things that matter, they trump everything else. It beats everything else. I'll look at a level here in the S&P. Where did the S&P sell off from yesterday? Anybody trading S&P? What was the highs yesterday? What were the highs in the S&P yesterday? Somebody has to be trading S&P. Just under the 2,800? Just under the 2,800? All right, so here, just magically, the market would not go higher. I know there was a news announcement about tariffs late in the afternoon, but the announcement wasn't there at 12 and the market still wouldn't go. That was a level. That was a level from June 11th, 12th, 13th. And what did the market do at that level? Remember, that's my question. That was all my question was. What did the market do at this level? Did it buy this level or did it sell it? The last time we were here, I'm not concerned about 10 years ago. The last time we were here, what did the market do with this level? It sold it. It sold it off almost 100, well, actually over 100 points. That's what it did the last time. So if you can pinpoint down to 5 or 8 points in the S&P, isn't that worth your risk to then say, I could get short up here leaning against this level? It may not, it may go straight through. It may. But ultimately what I'm looking at and dealing off of is the level. The same thing occurred on the bottom. And it just becomes cycles, back and forth, back and forth. Sometimes those get contained, sometimes they break out. Once they break out, it shifts to the next bias, right? So this one, this 2,700 was created back in May. It very quickly broke it late May, and this phenomenon we call here, this is referred to as rejection. So rejection simply means that the market tried to move beyond a level and wasn't capable of doing it. So in essence, buyers rejected lower pricing. Buyers rejected lower pricing only to come right back to your 2,700 price. 2,700, 2,700. 2,700 rotated up almost 100 points. That's a $5,000 per S&P contract move. 2795, 2798 rotates lower, right back to what? 2,700. There's some trade in and around 2,700. Not once was this market even capable of closing, even on a 4-hour. Didn't close one 4-hour period below this 2,700. It tested below it, and the same answer is over here. It would not sell it anymore. But knowing this level existed, knowing how meaningful that level was, is powerful stuff. And it's huge P&L when you treat it correctly, which is to say, I am using the level. As long as that level holds, I know what my risk is. My reward is any rotation, right? And so we're just simply going up the ladder here. Level, level, level. And that's what we're doing. And we repeat it over and over. Now I've added another component. So in our trading and what I offer in the service, I have everything from I use a daily model. It's a long-term model. It's something I built for my trading back in the mid-2000s. I sold it to a billion-dollar hedge fund in 2007. So it's something I've run for a lot of years. And it's really great in the sense that it's meant to be a trend following model. I deliver that to the subscribers every night, Monday or Sunday through Friday, or Sunday through Thursday, sorry. Sunday through Thursday at 5 p.m. So you get access to the daily model. It is currencies, euro dollar, dollar yen, Aussie dollar, pound dollar, sterling yen, and euro yen. It is futures markets, crude oil, gold market, S&Ps, the bonds, the 30-year bond. So the subscribers have access to that. So that takes care of your kind of longer term trend following. Shorter term stuff, we analyze the levels. We look for more of a swing trade component, right? We're looking for opportunities like this. We're looking for opportunities to trade from 2,700 to 2,740. Again, that's a $2,000 move. That takes care of your more medium term kind of swing trade type of activity. And then something that we just added recently that's more short term and really captures the day trading component is a much more active approach, and I do it really only on 2 markets. And the reason I chose these 2 markets is because of the volatility that exists. So the 2 markets I do it on are crude oil and S&P futures. And the whole goal is to capture a couple moves throughout the day, and it's just U.S. session, and I will typically start my day around between 6 and 7 a.m. Eastern, sometimes a few minutes more, but I'm really trying to capture the U.S. trading, the volatility, and those are really U.S.-centered markets. So again, think about what it is I'm trying to do. I'm trying to establish bias direction. I'm trying to establish edges. Remember, I drew the euro dollar and I drew edges, and I said, okay, well, what do edges mean? Well, here's an edge. Here's a level. This level was created on the 9th going into the 10th of July, right? That's where it created the high. So let me just show you what it looks like in real time. So in real time, this is what it looks like in real time. I don't know what comes next, but I know there was a high, and now I'm watching it. So any reaction off of it simply tells me, okay, it's a high. I want to mark this section. And again, I'm pulling from the top of the wick down to the body of the candle, and I'm simply pulling it right. All right, so I'm simply pulling it to the right-hand side. Now that's my level. That's my level to now look to deal short side against, right? Maybe with the bias, it may be against the bias, but it is definitively the level. So this is yesterday's trade into the level. So the question I would ask, if you're at all skeptical of levels, how does it just magically hold that spot? And the answer I would give is to just say this: don't overthink it. Don't overthink it. The market had its opportunity right here. It had its opportunity to go higher. Somebody or something or some groups of somebody simply said, I will not pay more for that market. Once they show you that, once they open their hands to that, now all of a sudden you have a light that goes on that says, now there's a spot. That is my opportunity. This is now 3 points wide, 4 points wide in the S&P. It may stop out, 100%. There's the possibility that exists that it may stop out. But the upside of that, what's the reward? What does a rotation look like? This is all trend stuff. This was kind of the last consolidation right here. Consolidate, high, back. This is the last consolidation. This is all trend. Markets can do 3 things. Markets can do 3 things. They can trend higher, they can trend lower, or they can go sideways. Those are really the only 3 tricks the market has. And on different time frames, you may end up with a different answer of what it's doing. So if you're sitting there with a monthly trend look at the S&P and saying, well, all it's doing is going higher, okay, that's fine. But don't sit in 5-minute trade and go, well, it's not going higher right now, and then call it the same trend. Those trends can look different on different time frames, and what you need to understand, where you have to come from this position of strength, is to check as many boxes in your favor as possible. Do I have a level to lean against? Am I going counter to the bigger term trend? I mean, what really moves markets when you think about it? Does little day trader move the market? No. Do they take part in the market? Absolutely. They provide liquidity, but they're typically flat at the end of the day. So who's moving the market? Big money moves the markets. And big money can be lots of things: central banks, large funds, groups of those. But they are directional in nature. Whereas us, as the short term, we just want to take pieces. For every long trade we have, we're going to have a sell trade that evens us out. So we are not necessarily directional in nature just as a group. But the idea, again, when you're defining these levels, right, and this is what we're looking to do, and we're looking to repeat. My risk, what is my risk in here? My risk is that it gets above and closes above this box. So if my box is 95 to 98, so it has to be a move above. So maybe to somebody that's 3.5 points, maybe to somebody it's 4 points. What's a potential reward? I mean, some very slight consolidation, but really the best idea of consolidation is down to 27.79. That's the best idea for consolidation. So top edge, 4 points risk versus about 16 of upside. The common theme of what I've been talking about for this whole hour is what? Risk versus reward. That's 4 rewards per 1 risk. I could lose 3 of those, right? I could lose 3 of them, make money on 1, and I'm still positive. I could have a 25% winning percentage, and I'm still positive. Isn't that phenomenal to think that you could be running a strategy that says I could lose 3 out of 4 and still be positive? Because do you know what happens on those times where you win 2 out of 4 or 3 out of 4 or 4 out of 4? Positive is, it's small. So the idea that I can lose 3 out of my 4 and I can still be positive is unreal. I always give this question to retail traders, and I almost always get the same answer. And I say, if you could run a strategy that wins 8 out of 10 times and it makes $1,000, or you could run a strategy that wins 2 out of 10 times and makes $1,000, which of the 2 would you prefer to run? And 90% of the people will answer that they prefer to take the strategy that wins more times. And I get it. Like, nobody likes to lose. I understand that. But if you think about what money management is, and all we really do, we manage risk, right? We manage risk. The idea that you could lose 8 times and 2 winners takes care of it. What does that tell you about what the 8 losers are? If you lose 8 of them and you win on 2 and 2 takes care of 8 losses, what does that tell you that the size of those losers are? In comparison, they're way smaller. They're way smaller. And the same thing being said, if an 8 out of 10 strategy yields you $1,000, what happens in the time period where the 8 out of 10 goes to 6 out of 10 or 5 out of 10? Ooh, it's all of a sudden different. But what happens in the strategy where the 2 out of 10 goes to 3 out of 10 or 4 out of 10? And so that's the mindset I like people to have, which is to understand it's not about trying to design, hey, I need to win 9.9 times out of 10 to feel good with the strategy. It's that over time, this strategy produces the results that work for me. Now it's scalable. Now it's scalable. So small shifts in my favor make it much better. But the idea of being able to consistently lean against edges, right? That level was identified at 9 o'clock the night before. It was testing it at 10:45 and testing again at 4 o'clock. But it did one thing. It did one thing. What did this level do? It did one thing, very important. It held. It held. The level held. The buyers failed to get it through here. They failed to get it through here. They failed. News announcement comes out and it actually really drives off. But the level held. That level is now adding more weight. So the idea of what you're looking at, multiple time frames, right? This is just the day trading look, the short-term look. But this approach has been really key in those people being able to take those small accounts and scale them. One of the things we talk about in our room is a lot of the people that, well, what if you can only trade one position? In other words, an S&P, it costs a certain amount of money to deal a contract, even with intraday margin. Well, the goal is, again, scalable. It's all scalable. So if I continue to trust the process and over time work those profits, I'm not going to be stuck on one contract forever. At some stage, I'm going to have the money to do 2 contracts. Jason just did his really quick. Jason did really well. It was very funny. I had a level in dollar CAD that we talked about in the room for a long, long period of time. It was a big level in dollar CAD. And so here's dollar CAD. I think it was something down here around the 27.5. And it was something that was on our sheets. We do an FX sheet every night, and we do a US Open sheet every morning where I will give kind of shorter term levels. And this was one of the levels. And it was funny because it was sitting there as we were doing the morning brief. We were doing it at 8:30 in the morning, as we do Monday through Friday. That's right, it's part of the service. We're looking at our FX sheets, again, part of the service, things I delivered the night before. So every single person had the level. They all had it marked up. And it just so happened to be that at 8:30 on the morning I was speaking about it, it was trading right at the number. You know, sometimes I'll give the level and you'll see it later that day. Sometimes you'll see it in days or weeks, and sometimes you won't see it. This just happened to be an example of it sitting right at the level. And so it makes this move, which was a big move. I mean, it was several big figures. And the funny part of it was that later on, I asked, who took it, who was involved in it, and there were a lot of crickets. But there was one that was not a cricket, and it was Jason. And that's how Jason runs his business, which is uses the levels, does his work, and then just simply executes, right? You remember the slide I had up before? It said levels, bias, and then execution. And, kind of the difference between Jason and a lot of people that haven't made that leap yet is there are a lot of people that will tell me this story, and it's very similar. I have a lot of baggage. I've lost a lot over the years. I don't know if I fully trust anything. My job is not to convince somebody to necessarily, hey, that this is the greatest way to trade. For as many people as there are in the world, I guess there's that many, different potential ways to trade. But what I like to continue to point out is to say, look, if you can find a level consistently in the markets you look at, and you can derive the meaning, and you can consistently put yourself in a position to risk one to make three, wouldn't that be attractive? And then if you use other tools, some people like to use filters, some people like to use other indicators, some people like to use other things they've worked with. But doesn't the core of it make sense? And if it makes sense, then I think we have a great offer. So what we're offering now, and I'll hop back to the slideshow here. How do I get back to the slideshow? Is 1 month in the room with us. So typically 1 month here is $149 a month. And what we're offering for this group and for this presentation is $99 for the month. And so what you get with that, you get to be in our room. Our room is open 24 hours a day. I don't man it 24 hours a day, but we're there with charts up, charts lit up through the better part of the American into Asian session, and then starting again the next kind of mid next European morning. So again, it's a $99 offer for 30 days. And so what I'm going to challenge to is to see an actual P&L here, and I'm going to put up a number that I think makes some good sense for a lot of reasons, but the challenge is going to be a $2,500 for the 30 days, which is that we're going to make $2,500 for this 30 days. That's the challenge. And what that comes from is the shorter term trading, the levels trading, the trades that we can identify live in the room, again, not backwards looking, but stuff that we're going to be calling out and looking at. Monday through Friday, we do 8:30 a.m. daily trade sessions where we go over the levels, the bias, what the game plan becomes for that trading day, how to approach it. We have, as I mentioned earlier, a trend following. It's a daily trade model. The 4-hour trade model, it's much more what I've been doing is producing swing type looks and defining those in more the 8:30 a.m. And then the intraday setups. The intraday setups have been very exciting. I've had a lot of really good feedback. Yeah, so it is 8:30 a.m. East Coast time. But the intraday trading, I think, has been great. It's been very exciting. We've seen probably on average, I don't know, I would probably think it's like 3 to 5 setups a day per market, and we're looking at crude oil. So it's crude oil futures, and E-mini futures, the S&P 500, the E-mini futures contract. And those are the two markets we're working on intraday. We do have 4 other markets that are projected on the screen, but I'm not intraday trading those. I'll call out setups when I see them. Euro dollar, gold, dollar yen, pound dollar, but the only 2 that I'm really focused on, and I think for me and my approach, a lot of what I need to look at, it's 2 markets is more than enough for me to be focused on and have something there to look at. All right, so I know we're getting to the end of it, and I want to keep to the time I kind of sped through, but a couple other points just on what we're getting with this $99. I do a weekly education, and so if you sign up now, we're doing a Sunday class. We do the education sessions on Sunday mornings. Everything is recorded, so you will get to see, even if you're not live and present, you always have access to those recordings. We do have some on-demand training classes that are in there, so some really nice resources. It's really a good group of people. The atmosphere is very much everybody pulling for each other, always good people to ask questions on. And, I would look at my role as more the head trader of the group. And it's not an environment that I would tell you is about, hey, just copy every one of these trades, although possible to do. It's really an environment where I'm teaching you to think for yourself and understand your best approach for how you want to do it and the best way for you to run your business. So it's a really great environment, and I've really been happy with the progress and seen a lot of good people over the last several years that we've been doing this, and the addition of the short-term trading has just really added to our overall approach. NQ, yeah, so Rosa's asking the question, do we cover NQ? NQ is one of the markets that is covered in the morning analysis. It is not up on the screens in terms of a day trading component. So NQ is not an active live market. Another question, do I teach how to figure out the levels? Yes, everything I'm about is the levels. So I teach how to do the levels, how to find the levels, what to derive from the levels, and once you've mastered that, it's good to go, because from that point you can say, hey, I need to add this other tool or component, or I don't need to add this other tool or component. Some people prefer multiple filters. I'm not an enormous filter person, but I do think a couple things are certainly beneficial, especially in the short term. Something we're using in the short term now is just a simple MACD. It's just my idea is to always keep it simple, understand what the upside of what I'm doing is, understand what the downside of what I'm doing is, but that the levels are the big picture focus that I want to have on. For day trading for crude and NEOS, how far do you look back? So somebody asked, how far do I look back for day trading? The kind of the approach in the market is to always be aware of when you're sitting at levels, or what levels are of what implication. And so from that standpoint, what you're focused on in the day trading is you're focused on signals that are occurring that day. So I don't know if the question is more to mean, do you look back 2 or 3 days? I mean, we're focusing on that day's action, so it's always right-hand edge type of stuff. No, it's not an order flow program at all. I don't use order flow at all. I use a timing indicator. I don't know if you guys saw it on the chart, but I use a timing indicator, which is a count. It's a candlestick pattern. It's similar to, if you guys are familiar with it, it's similar to DeMark. But essentially, I'm using that as the timing on the short-term stuff, and I'm using levels. But there are, as I said, there are lots of classes in the documents folder, so on demand, but we go over levels all the time, so it's something you will be very familiar with and that I teach. You will not be left hanging in terms of what does it mean or how do I derive a level. Okay. Yep. So guys, again, any interest, it's compassfx.com/trade50. Again, it's $99 to spend a month with us. Regular pricing is $149, so it's a nice discount off that. Thank you again to Jeanette for everybody listening. I appreciate everybody's time, and it's been wonderful. So I hope to see some of you soon, and thanks again. Have a great day.